Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 22nd of January. Starting off with the FTSE 100, which looks as though it's in a mid-move consolidation above previous resistance, 84.74. Above that, looking for an initial target there, that resistance line there from the end of 2023, 87.20. And then the logical place to go, the top of the rising trend channel there at 9,000 perhaps by the end of next month. Seems to be difficult to work out what might do that apart from Trump, but we've already done very well over the last week, so it looks as though this is a lasting breakout. Moving along to the DAX, and it is hit ahead of time the target we wanted it to do, which was the top of that rising trend channel from the autumn of 2023, so 21,200, the nominal level there. Above that, we're looking for a move within this rising trend channel, the red one, which tends to be a bit of an overshoot type thing, but nevertheless, at the top of that channel there from October, we've got 21,900, and let's see if this market can stretch to that over the next few weeks. Ideally, we stay on the right side of recent support, 20,900. Stop loss on the breakout, 20,700, the floor of that October trend channel. Moving on to the Dow, which has actually been a bit slow to the party, ironically, given that America is driving the current rally. Here you can see that we've had an end of day or two end of day closes above, well, at least one end of day close above the rising 50-day line. The previous close just missed it, but here you can see that we've got the top of the channel there heading for 46,400. Maybe that's a decent target for the end of next month, while we remain above the 50-day line and recent resistance, to oldest December resistance at 43,400. It's a bear trap gap reversal, so one of our better setups, and bullish divergence. There's a double signal there for the Dow to head higher and to go to record levels potentially. Moving on to Bitcoin, which has already done its record levels, but went through the December peak just a few days ago. Current position is that we've actually hit that line that we were looking for there. That was the target line from April last year. That was around the 109, 108, 109 level, just breaking the December peak. End of day close above that, we're looking for up to 122,000, which is basically the top of a large rising trend channel from back in March last year. So basically that would be the floor. As I'm drawing it now, that would be the top. The black line there, an intermediate line. In terms of the downside or a potential rug pull, obviously assuming that we'll stay above at or above the 50-day line at 98,000. If it's really strong, then 102 to 103 would be the support, which was that initial January resistance. Moving on to gold, and here it's consolidating at basically post-October resistance around 2750. The top of the channel here up to 2940, which we're looking for perhaps as soon as the end of next month, although that might be pushing it. And obviously we've got the old record there around the 2800 level to try and get to, maybe even as soon as the end of this month. Worst case at the moment is that we have to have a test of the 50-day line and the floor of the rising trend channel from February around 2660, although it looks as though hopefully we'll have 2720 in that broken October resistance line as the support. We've been helped by the latest RSI rebound off neutral 50. There was one at the beginning of the month as well, so double signal there on gold, and the 50-day line rising along with the 200-day line gives this a very good look indeed. Moving on to the stocks, and a lot of aqua stocks in the selection today, which has to be regarded as a good thing, I suppose. Here you can see that starting with Coinsilium, its Bitcoin strategy looks like it's going to be, well, it's already been well received by the market. We had the old resistance there around 3.5. Above that, initial target here, 5 pence, ultimate target, maybe as soon as the end of next month, up towards 8 pence, and that violet-coloured or purple-coloured resistance line projection. Ideally, we stay above that rising 50-day line and the old resistance from last year, but it looks as though we've had a decent gap close buy signal yesterday, closing that gap down there, and all we're really looking for now is sustained price action through 4.5 pence. Moving on to a stock which came up with a great announcement today. Obviously, the market loved it. And latest in the line of rabbit out of the hat deals that we've had from small caps since basically the beginning of this month. Multi-bagger situations, Trellis and Fiinu, etc. And this is Exchange XR, which is the latest of the bunch. Recent resistance there in July was around 1.1 pence, and above that we're looking at the top of that falling trend channel from the beginning of 2024 at 1.8 pence, even if we fail again after that. After that, we can hopefully look for the February resistance of last year, but let's see how we do at the moment. At the moment, it looks very good indeed. The other point to note is that we've had an unfilled gap to the upside, which tends to be a sustainable signal on the basis that the bears have been caught out. On to EDX, another Aquis stock, and here we've actually gapped up. We fell out of our rising trend channel during basically the end of last year, and the current situation is slightly messy, but it's a bear trap rebound from below the old May support there around 7.4 pence. Above that, obviously looking for a retest of 12 pence again, especially with the latest gap higher that we've seen. It was actually a bit strange that the shares went down as low as 6 pence to start 2025. Moving along to the aforementioned Fiinu, and here it's been up and away, and really, if you think about it, given that the shares were in early 2022 up to 20-25 pence before they had any proper significant news, as we've just had with a bank tie-up, then it should be the case that we go all the way back up again. But obviously, life's not that simple at the moment. We are finding support on the old resistance on the way down, so towards 8 pence, but above 8 pence on an end-of-day close basis, looking for that resistance line projection from 2022 up to 18 or 19 pence by the end of next month. On to Greatland, which said it was very pleased with itself. It's a shame that the market's not quite as pleased with it as the company is, but we are making progress. It's sort of turning around an oil tanker. What would be nice here is that the 50 and 200-day lines were both rising, which I think at the moment, if you look closely, you can see that they are, only just. The other point would be an end-of-day close above the 200-day line there at 6 3/4 to give us at least a retest of last month's resistance towards 8 pence. Ultimately looking for 9.5 pence at the moment, while we remain above recent resistance around 6.4 pence. RSI's pushed through neutral 50, so that is a potential leading indicator on the upside at long last. And I suppose we've had 3 higher lows since the November double bottom that we had on the stock. On to Incanthera, which is another Aquis stock, and here interesting in the sense that we've had a slight rebound, just breaking the top of that, or the floor of that gap that we had back down in November. That was around 5 3/4 pence, and looks as though maybe 1 or 2 people nibbling here, anticipating news, presumably good news. There's a gap to fill and the 200-day line to hit at 19 pence. Maybe that's a bit ambitious, but we could maybe manage around 11 or 12 pence if there is some news, as one might suspect after yesterday's candle, which was very strong indeed. In fact, recent candles have all been on the positive side, which does suggest that maybe 1 or 2 people are nibbling in there. On to LungLife, which I haven't looked up for ages, and here the situation is that the stock is trying to regroup at the moment, and you can see that we've got this bear trap rebound from below the November support there, 8 1/4 pence. Above that, looking for the top of that broadening triangle from back in September, as high as 14 pence by the end of next month. The other point to notice, that which I've said on many occasions now, to always keep an eye out on the candles, and the candles here have been over the last 4 sessions very, very strong, opening at the low, closing at the high. That tends to suggest that there is a genuine accumulation here, and somebody's buying for news or just as a value play. But at least while we're above that rising 50-day line now, looking very good indeed. Moving on to a couple of stocks where we hit the targets right on the nose. The first one is Physiomics, where the target there, top of that rising trend channel base, 1.05. We obviously overshot that, but looking for an end-of-day close through 1.1 pence to give us an ultimate target here as high as 1.65 pence by the end of next month. Ideally, we stay above the 200-day line at 0.88 pence, whatever happens there. On to Pantheon, which had an announcement today, and I suppose it's in the drill baby drill type of situation there with Trump, etc. We've hit the, it's the third target there at 43 pence. Above that, there's another target to shoot for now, which would be the upper parallel of that resistance line from back in April, and so looking for 54 pence, hopefully over the next few days. One would imagine that with Trump around and the drill baby drill situation, companies like Pantheon are going to be on the front foot, even more than they already are at the moment. Petra Diamonds is next, and here got a stock which is trying to revive itself. The block here is their resistance line there from October. That's at 30 pence. We need an end-of-day close above that, or if you're fussy, the 50-day line at 30 3/4 to give us a target as high as 37 pence by the end of next month. On to QBT, which I interviewed earlier in the week, and was very happy with that interview. We can see that we are consolidating here just below the previous target there, which was around 1.9 pence. We need a day close above that to give us a fresh leg up to 2.7 pence, hopefully by the end of next month. Ideally, we stay on the right side of resistance on the way down at 1.3 pence, whatever happens there. Moving on to Red Rock Resources, and here we can see that the shares are got a little bull flag resting above the 200-day line. We've already got the 50-day moving average rising. That tends to be a decent signal when we're at the bottom of the range. So above the 200-day moving average at the moment, 0.046. Looking for 0.08, maybe by the end of next month. Obviously, fundraisers and other nasties permitting. You could argue that we're in a broadening triangle there from back in March, and the target's a bit higher, but let's just go for the top of that falling trend channel from February while we're above the 200-day moving average. Moving along to TAP, which is promising to be EBITDA positive early this year, or at least in the first half of this year. Here you can see that shares have held or sustained the spike they had in November. Another gap to the upside today, and initial target here, 4 pence, which I've been banging on about for ages, and the shares have taken their time on that, but above 4, looking for a fresh target there, which would be up to 7.3 pence. Perhaps as soon as the end of next month, if we get a proper bounce on Bitcoin towards the $20,000 area. The other point to note is that we've had a bounce off RSI 50, which tends to be a leading indicator on the upside. It actually has been in this case, as was the extended bounce back in December. Moving along to Valereum and this Aquis Sodden selection. Here you can see that we've, basically all our dreams have come true on this one. The first target there, the second target there towards 22. Third target now at 35 pence, which you're looking for obviously by the end of this month, while we're above the initial January resistance at 28 pence. But plenty more to come potentially here. You could argue that the next target is actually up at that parallel there, up towards 40 pence, but going for a more conservative 35 pence at the moment. Finishing off with Vast, where from memory, the half a bar that the CEO put in has made something of a difference. We are rising above a rising 50-day moving average, and it's a sort of a U-shaped turnaround, so it looks as though 0.18 pence, which will hopefully be the minimum on the upside. The maximum on the upside actually could be as high as 0.2 pence, but it's just interesting the play between the normal rinse and repeat placings that the company has, and the fact that this time the CEO has put his hand in his pocket in a big way. So that does suggest that hopefully there will not be any more fundraisers of the nature that we've seen before. Ideally, we stay above the initial January peak there at 0.1 pence ahead of our 0.2 pence target, and you can see the RSI 50 rebound for the shares as well, looking very strong indeed with all those blue candles. That's it from me today. More updates tomorrow.